Let's talk about some of the cues that are playing out in the markets today. Peter McGuire is with us on the phone line. Peter, till about 12 hours ago, it was all about the Fed, but Trump has seized the narrative once again, striking a conciliatory tone as far as resolving trade issues with China goes. Is it just, again, one of those comments that come in ahead of these trade wars and then markets get happy and then you don't have any result coming in and we see a correction happening? Or could there be some meat to it this time around, considering that they've already gone a few rounds with each other?
Well, good morning, Dipanshu. Yeah, I think a couple of things. First off, we're only a week and a bit away from those Osaka G20 talks, and I feel as though the president's on the front foot. He wants to no doubt get a deal done, and I think that China does as well, because there's been enough moving parts to make this whole equation look like it wasn't going to happen, and it is going to happen, and it's been an ongoing saga. So it certainly has put a rocket underneath the market. The Dow bid well up, crude up. And you've also got the other side, of course, is as far as Draghi coming out and saying, is the ECB prepared to drop rates? You've got those France and some of those other yields at, record lows of zero. So that's really creating the tension. And you've got Jerome Powell and the Fed. So I think that there's enough push to the upside, and I feel as though President Trump really does want to get a deal done, don't you?
Right, Trump does want to get a deal done. What's the sense then, Peter? Because he's been pressurizing the Fed to go ahead and cut rates. There were some speculatory stories that came in yesterday that he was in fact looking to remove the current chairman Powell as well. We don't know if there's any truth to that. Will the Fed bite the bait for the moment, or they'll wait for an eventual outcome of this trade deal before taking a call on those rate cuts?
I would tend to think, well, first off, yes, the talk there as far as removing Jerome Powell, or at least finding, can it be done and how is it done? And like working for an entrepreneur, it's you're always on tenterhooks. So I suppose President Trump's really demonstrating that if you want to work for him, then you need to be do it his way. And I'm not sure whether Powell. I know that they don't work for the White House, but as far as the president's concerned, I think everyone works for the White House. So there's that part. Yes, the other side, of course, is I think that the Fed will wait until we see some definitive action coming from Osaka, and then may move, that July, August sort of time frame. It's a little bit of a wait and see, and just see what happens in the next matter of a week and a bit. You've got a lot of different meetings coming on. You've got BOJ, you've got BOE, we've heard what Mario Draghi said, and we've of course got the minutes coming out of the Fed, and then next week you've got OPEC, of course, in Vienna and Osaka. So for G20, so it's a big week ahead of us, and I think there's going to be again more volatility for traders.
This rebound in crude, Peter, since you did mention the OPEC move, is it sustainable? I mean, usually we do see a positive correlation between strong trends in equities and oil prices. Is this rebound sustainable?
I think it was just some profit. Well, I feel as though it's been a very strong bounce. Is it, in the sense of can it stay at that sort of number or move higher from here? Well, let's just see what happens as far as the good news has come into the market. Maybe the market's possibly overbought a little bit at the moment. We're all understanding what the demand picture is. We've got the IEA, the EIA, and OPEC all revising forecasts down, to the downside for, growth prospects for the rest of 19 and into 20. So that's not a good sign. You had those rocket attacks or mortar attacks on those ships in the Gulf of Oman last Thursday, and that put a rocket underneath, pardon the pun, for crude, up 4%, and then it sold off 2% on that trading day. So there's been nothing really to push it higher, and this has come out of nowhere, the President Trump's word. So maybe there's a week of good news ahead of us and building into those OPEC and Osaka talks. So, yeah, you might see a little bit higher from here, but it's going to be hard to see it push, through, WTI up above 55. I really can't see any move to really get it above there in the short term.
Right. Peter, I was reading a couple of reports. One is from BofA ML, Bank of America, which says that investor confidence in markets today is at its lowest level since the financial crisis. The other report I was reading says that this is the longest bull market we've had on record if you go all the way back to the end of 2008. S&P has risen for about 3,800 trading sessions now, and this is the longest on record. Are markets propped up artificially on the hopes of Fed rate cuts, on the hope of trade, and essentially these moves are just keeping the markets afloat? I mean, is there a sense that there could be a stronger correction coming that none of us are seeing because of that intensified slowdown?
Well, if you put your mind back, and I vividly recall the market sitting at around about 665 or 670 for the S&P, and I think around about that March, April 2009. So in those 10 years, it's put on 2,000 points, which is just quite incredible, or 2,200. So that gives you some sort of indication that yes, it's been very well bid up. There's no doubting that. Are we ready for another? All good times come to an end. That's the reality of it. But we've got that kicking the can down the road, analogy where you just keep on dropping rates, and maybe the States is going to do that, and President Trump, for the next 18 months till the next election, he needs to have a stronger economy, not a weaker economy. So he'll do whatever's needed to try and get that result. Investor confidence, well, if you're looking at stock markets, it's been an incredible time to be involved in them, and the returns have been outstanding in the US. So maybe the mood is they're sick and tired of making money, but it's been an incredible 10 years if you put your mind back to those sort of games. So I'm not sure whether the party's over yet, but when it does, when the fun comes out of it, I'm sure you'll see it, wash out considerably.